Okay, folks, I think we should be live. I was having a few technical difficulties here. I just want to make sure that we're all set. There we go. We are live. All right, there we are. We're good. Good to go. Good to go. Hey, everybody. Good morning, good afternoon, good evening, wherever you may be. This is Bojan Petreski, Bo, joining you live here on this Monday, January 25th, 2021. Just to confirm in the chat if you guys can hear me and see me okay. Just want to make sure everything's good. I'm going to go ahead and set this to live. Alrighty. Just want to make sure we're all set here. I think we're good. Yeah. Alright. Okay, folks, before we get started, just a brief discussion here, a brief disclaimer rather. The following videos, clips, and demonstrations are for educational and instructional purposes only. TRADDICTIV provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all content used in this video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. All right, good to go. All right, Joe, thank you for confirming that. That's good to know. All righty, so let's get started because we are running a little bit behind, but not too crazy. All right, so let's go ahead and open up our TradeStation, our short time frames climates. Right, today is a futures short-term trading session. We'll be looking at our 50-minute and 60-minute climates primarily, I would say. We could also look at some of the 240 just to see what we got going on. All right, let's just have this update real quick and we'll be on our way. So looks like we got lots of movement. As you know, just to kind of go over this briefly, just in case somebody's joining us for the first time. We run these sessions. We run these sessions primarily, for educational purposes, and primarily for the reason of looking at this from a perspective of either somebody who's just joining or just getting on board with trading, or is kind of already in the jive of trading and wants to kind of enhance and kind of better their skills and better their process when it comes to trading. So the way we work with this system, and the way I think every system really should work, is through a permission-based system, right? So you need to have permission before you take an action, and I think that's key. That really is key because it helps you stay out of trouble. It's one of those things where if you have permission to do something, then you do it regardless of what you feel like. That's the key thing there too. It's just trying to avoid feelings as much as you can, because believe me when I tell you, that's just going to get you to stay out of trouble. Okay, and the way we go about that in practice right now, right, because it's easy to talk about it, it's easy to show it on a fancy PowerPoint. I think it's more important to be able to demonstrate it, real time, in real live action samples, let's call it, in actual trading. So the way we go about that is the following, right? So we have our climate window, and this is the first thing that we open, right? I'm just going to zoom in a little bit here. We're looking at our 50-minute climate, and we'll also look at the 60-minute climate primarily for this trading session because obviously we got about 40 to 45 minutes every one of these sessions. It'd be nice to get into trades. We're not going to force them, obviously, but there's a better chance that we're going to find opportunities in these shorter time frames than some of these longer time frames, right? So we're going to focus primarily on these because they're going to update at least 3 times while we're in this session. So the way we go about this is we look for things that make sense, right? That's why this word sensible is right there. And we need this climate, which is up here, right? That's the column for climate. It needs to be a certain color, whether it's red or blue, meaning it's giving us that it is confirmed, right? So a confirmed up climate and a confirmed down climate is what we're looking for, as long as what makes sense here is in front of us. So a sensible short or a sensible long, like we see here, is the things that we're aiming for. Now, Can we trade hopeful climates? You know, sure, we certainly can, right? You can adjust this plan as you see fit. I would say adjust it, back test it, see the results you get, and then apply it with real money. You can most certainly trade hopeful climates as well, because sometimes, you know, different instruments at different times may go into, you know, hopeful territories, meaning they keep going up, you know, past what makes sense, and thus being hopeful for an extended period of time, right? We've seen it time and time again. Sometimes certain instruments just go, you know, twice, 3 or 4 times past this climate, which is something that can happen, you know, but, you know, you also have to kind of take into consideration, you know, after backtesting it, does this make sense for me to do? So, you know, are you okay with, for example, let's say you get in at the middle or at the end of a hopeful climate, and then when it reverses, are you okay with what happens next? That type of situation. Okay, so that's that. We're gonna take a, you know, we have quite a few of them that are sensible in the sensible climate right now. They're a little bit far away from price, so I'm just gonna go through the ones that are sensible, that are closest to their ATR. Okay, what that means is there's a, you know, a better chance of us getting filled on these products, on these instruments, as opposed to some of these that are 2.5, 4 ATRs away from their current price, right? So let's, you know, as we see, the ES, the NQ, RTY, it looks like they're all just tanking, and, you know, they're quite deep in the red, over 1% in the red. But it looks like crude oil, even though it's 1.2 ATRs away, is the closest one, and it's on the first sensible down climate. So let's go ahead and open crude oil. Okay, and guys, if what I just said makes sense, you know, please feel free to just type it in the chat. If it doesn't, please feel free to type it in the chat as well. I'll be more than glad to go over some of this stuff. All right, so I think, yeah, this is no longer the active contract. Let's go ahead and take a look at this. I'm not sure why. It's every time I save it and it still reverts back to this one. I think it might be something to do with my workspace being saved on Google Drive, maybe. CLH21. So as you see, you know, crude oil kind of falling off a cliff here. You know, it's not uncommon to see, you know, big moves like this on crude oil. Let's take a look and see what we got going on. So the first thing that we look at right after we open this workspace, we focus right here down below on this bottom workspace, right? So we're looking at this, we're seeing that it's on the 15-minute time frame. We look at where the moving average is, the moving average exponential, the 9 EMA, that's the one in the gray. Current price being at 51.93, moving average being at 52.23. So, you know, it's about 30-something cents away from current price. And the most important thing, it is a confirmed climate. It is the first one out of typically 5. So we're definitely early to the game on this one. It's something that we should always be aware of, where we are when it comes to the climate. All right, so the next thing we're going to look at is where are the opposing UFOs on this larger time frame, and that we see right here in this same chart, and we see that it's right at where price is right now. Okay, so all right, why is it not letting me zoom in? There we go. So we see that we do have an opposing UFO right here at this strange. Having a bit of an issue here with my, I wonder why. Alright, let me just exit this. Sorry, I'm having a bit of an issue with my with my tool here that kind of helps me kind of show in and zoom in. So what I'll do is I'll just do it the kind of the old-fashioned way, let's call it. So we're gonna look at this right here. I'm just gonna throw a quick horizontal line just so I have a reference price, right? The way we get that exact price is right here. we tap on it, so we see that it starts at 51.88. So we're just gonna go ahead and adjust this to 51.88, just so we have it, guys. It's nothing, it's not requirement, but I like to be, you know, extra visual with this stuff. What I said is sensible. Thanks, Jose. Okay. So you know, that's our opposing UFO. The reason why we want to have this ahead of time is in the event that we do get filled on this trade, that is where our final target is going to be, right? Because we're looking at a sensible down climate. We're looking at this to go short, so we need to know where our final target will be. Our final target will be at 51.88. Now, in about 20 seconds here, we're going to get an update on this moving average, the 52.24. Okay? There's a good chance that this is going to be somewhere around this, you know, 15 to maybe 16 area, or actually 19. Okay. So it's a little bit lower, not that much. What does that mean for our trade is the following. If we see the price to go back up, let me just see if I can get this so I can kind of show this better. If we see this price, you know, stops here and it kind of gets filled, these UFOs do get filled, and this UFO does get touched, right? 51.88. It looks like it did go into it, right? It went as low as 51.82, right? So it did touch this UFO. That's why it changed colors as well. And now that we got a new 15-minute climate, you see that it changed colors. That means some of the orders have been filled, not all of them. And as you see right there in front of you, this UFO that was here has disappeared. Those orders have been filled as well with a UFO up above. So what that means is that, you know, price needs to find some more sellers and try to get up into these two UFOs, right? It needs to kind of find some buyers and see if it can drive it up there. And that's where our potential entry is going to be. Now, the reason why that's the case is because as price moves up, the moving average moves up, right? That's why it's a moving average. And the way we could address this is the following, right? We see that current moving average is about 52.19. Let's just round it off to 52.20, right? So if price were to move 20 cents, you know, do we see this moving at least 10 cents, right? I would say maybe around 7 or 8 cents, right? Depending on the velocity of the move, right? If it just skyrockets in there, then absolutely. If it kind of takes its time and maybe a little bit lower, maybe somewhere around this 52.22 area. That's why when it comes to intraday trading, a little bit more active and reactive trading is how I like to call it when it comes to intraday. You need to understand that, you know, you need to adapt to these changing environments. And the way we adapt is we make sure we enter the trade according to our rules, according to our plan, and not trying to just, you know, get in just so we can get in, right? So as of right now, we're going to set this up here at the 52.30 area, right? This is where we're going to set it up and see how it looks. And the reason why I like to do it, because again, it's very visual, right? You see this and you say, okay, you know, this 52.30 is a decent entry. We can even take a look at this UFO down here below that starts at 52.29, right? We can go one tick below, so it's at the beginning of the UFO. And now we got to make sure that our stop is, you know, in an acceptable place. What does that mean? Well, the stop needs to be in the white space. The stop needs to be located where there's no red UFOs. And as you see right now on this 2-minute time frame, there's quite a bit of a large UFO here, right? Where the stop is. So that means our stop cannot be here. It can be either in this white space or in this white space up above. Same thing here, this white space, right? And there's nothing else, or this white space. So unfortunately right now, the way this has to go is we need to move our stop way up here at 52.40, 50 actually, even, in order for this trade to meet our criteria. So what that did to our trade is, you know, it definitely increased our risk, right? It increased our risk by about, I think it was about 11 ticks, right? So if we were to look at this, and this is the easiest way to kind of show it, if we were to look at this and go into our TradingView, and if you just open up, it's going to be at So CLH21 crude oil futures. Okay. And we were to place this trade through there. Actually, since it's already on the sim, it's already placed. We're looking at, well, it's kind of easy to do with crude oil. You just go 50 minus 50 even minus 29, right? That's 21 ticks. So that's, you know, when you go times 10, that's $210 per contract that we're risking on this trade. As it just so happens, that's $10 more than my maximum. So I personally will not be taking this trade. However, what I kind of anticipate happening is something of the following. And this is just anticipatory. It's not guaranteed, but I think this is more likely to happen than not. I think that, you know, it's more likely that the crude oil, while it's coming in strong, it's going to pause at some of these locations here before it retests the lower part, and then we get in with a possibility to you know, be even more reactive to what's going on in the market here, and that's just going to increase our risk even more. That's therefore invalidating this trade by quite a bit. I mean, if this is a risk parameter that you're okay with, and that it's within your tolerance limits, let's call it, then, you know, by all means, you know, go for the trade, right? It meets the criteria. Something else that comes to mind is obviously, you know, these safety targets that we need to have, right? Obviously, if you're risking $250, you know, you're gonna have to be somewhere around this 52 even area for your T1, and then, as we said, at 51.88 for your T2. So you also need to figure out what the risk to reward ratio is, and given the fact that you're risking so much just to get to T1, right? 25 ticks just to get to T1, is a little bit of a little bit of hopeful thinking, right? A safety target should be something that you're gonna hit most of the time, not hope you hit it, right? And then the other factor comes into play that, you know, a time and trade would most likely trigger this, and you'll get out either a little bit in a loss or a little bit in the win. Obviously, that's just me talking from experience, not really, you know, I don't have a crystal ball, right? This could literally touch this limit order and just collapse down, and we get both T1 and T2, right? That would be the best case scenario. However, there's also a scenario where this could just run right through and go all the way to the stop. So as long as you're okay with either scenarios, you're okay to take this trade. But if you're not, then you definitely should not take this trade. Okay? I myself, as I said, because I can't, this is not a trade that I would be willing to take, so I'm going to go ahead and cancel it. That's just my personal preference. Otherwise, the trade does meet the criteria, the rules for entry. And as you see, it is flashing near sensible short. Okay? Now, and as you see, 23. So yeah, it is going to end up being actually right here in this UFO at the 26. So it's actually going to be an even more aggressive trade. If you were to enter right here at 52.22, you know, you could not put your stop at 27 because of overlapping UFOs. You could not. Could you put your stop at 35? You could not because of another overlapping UFO over here. So your stop would definitely have to go up here at 52.50. All right, guys. I know I kind of flew through this just because I saw price moving, but let me know in the chat if you understand, if you follow my thought process of how I'm going about these. Our job, I feel like our job is to say no a lot more than it is to say yes. Okay, and that may seem a little, you know, counterproductive, if you will, but it's also because of the fact that we don't get paid to open trades. We get paid by closing profitable trades. Okay, so that's the key factor here, is don't just go in there just so you can be in there and you see price moving in front of your eyes. You're like, oh my God, I missed out on so much. Okay. Interestingly enough, the 60-minute time frame is also giving us a near sensible short. So because there's not a whole lot of other development here, actually RTY is 0.7 ATRs and the Dow is 0.9. GC is in hopeful. So let's look at the 50-minute time frames. First, even though I'm very interested to look at the 60-minute time frame on crude oil, let's take a look at RTY on the 15. And just to see what's going to happen. Okay. All right, there we go. So RTY, there we are. RTY, here we go. We got room below. We got room below right there, 21, 22, 80, let's call it. Right? So let's just put a, you know, an approximate horizontal there. Let's get the exact one over here. So 21, 23, 30. 21, 23, 30. That's our final target. Okay. I'm just going to reset the range. The UFO is at 2160. I'm sorry, the moving average is at 2160.22. We do have this UFO here. The concentration is here. So there's a good chance that by the time it gets to us, this will get filled and we won't be on board. And do we have anything up above here? We don't. Anything up here? We don't. So this is the only UFO that we could use for entry. This is, I think it's going to meet criteria. Let me just take a look at the risk. All right, we do have another one that just formed there, but unfortunately that's not within the moving average range. Let me just go ahead and open up RTYH21 on TradingView. So if we were to take this short at the beginning of this UFO, which is 2154.9, okay, so if we were to sell 2154.9 right at the bottom, all right, and we had a stop loss of 2162, okay, that is, no, that's not right. 2154.9 to 2162. Okay. So that's still a little too much of a risk per trade, but given that RTY, okay, and this UFO just got filled already, so it's already bouncing down. So let's see, 2154.9. Okay, and if we were to go at 2162, that's $355 per contract of risk. So, you know, obviously we can't take it with the regular RTY, but we can take it with a micro. Okay, so that would be a, you know, a tenth of the price. So that would be at MRTY, isn't it? RTY E-mini. It's not showing up. Yeah, I'm sorry, it's M2K. That's why I'm like, I know this one was a weird one. It's M2KH 2021. So yeah, so that would be a $35 risk. But as we see, this didn't even come close. It's already moved quite a bit of ways. Looks like the markets are you know, quite a bit volatile today. What happened with crude oil? The high was 21. Okay, so it didn't quite touch it. It came a tick away from touching where we would have entered, and it's already essentially touched T1 at 52, which is kind of crazy. But again, that kind of crazy movement is rare, but it happens. So RTY, you know, again, we can take it with the micros. I'm gonna put it on here at 2154.9. We said 2154.9. Okay. You know, the unfortunate thing about this is that, you know, given the how quickly these markets are moving, there's a good chance that we're gonna have to adjust our entry. But let's put it at 62. So again, 62 minus 54.9, that's 7.1 points. So our T1 will be at 47.8, right? So 47.8, and our T2, just gonna enable chart trading here, and I'm gonna move our T2 down to, we said 21.23, 21.23.3. Okay, yes. So that would be the trade, but again, I would definitely say, you know, taking this one with the micro would definitely be a little better of a setup, given the fact that it's quite the amount of risk there. We said like 335 per trade, per contract, right? So if you take it with the micros, this would be somewhere around $70 for the two that we would be taking. Okay, that's the advantage of having the micro contract. You know, you can kind of separate this to the best of your ability, let's call it. All right. All right. So we looked at crude oil. Crude oil is still kind of showing that sensible short. We just got an update on the moving average, right? So we see it's at 52.19, and that actually falls within this UFO right here. So I'm gonna go ahead and place this trade. Oops, not there. Crap, 52. I'm gonna look at this 52.15. Okay, and I'm gonna adjust my stop to 22. And that's, as you see, it's below these UFOs. That is definitely a smaller risk trade. So it's only 7 ticks, $140 per contract. So that we put that there, and of course we move our T2 down to 88, and now we have a trade that we can definitely take. You know, smaller risk, acceptable risk, I would say. I just hope that we don't get to miss it, just because, as you see, you know, we might have, technically speaking, if you were fast enough, you would have already gotten filled on this. As you see, it did go into this area, the high of 52.16. So if you were watching this like I would typically watch this when I traded myself, you would already be in this trade. And not only that, but there's a good chance that you would be hitting T1 right now, right? So, and right there would be your T1. So you would be out of risk on this trade already. You know, obviously I'm kind of shuffling through these to keep looking for opportunities. But if you have this open, and, you know, given the fact that I'm sharing my screen here, I'm limited to one screen that I can show you. But for example, I work with 3 screens on my end, so I would definitely have caught this as it updated the climate. And as you see, the UFO, it's still a valid trade. This is what I was waiting to see. This candle closed, and here we are. We're in the trade now. Okay, so, and now what we do is the following. We put a vertical line here, and let me just adjust this vertical line and make that purple. I usually have this defaulted, but there we go. So that's our entry candle. Now what we need to make sure is, you know, basically 1, 2, 3 candles from now, meaning 6 minutes from now, we need to be either out of, you know, into a T1 or to be stopped out, right? So that is the time stop, the time in trade rule that we have, which essentially says, hey, you know, if I have the moving average in my favor, and actually I just realized this ended up missing it by a tick. Oh no, it's within the UFO, so it's fine. I thought I'm gonna miss this by a tick with the UFO, but it's actually fine. It's according to plan. So within this time frame right here, within this, I call it the purple rectangle, right? Which inadvertently actually came out blue. Within this purple triangle, square, we need to be out of risk on this trade, right? And the reasoning behind that is the following. If all of these things, the UFO, the moving average, the climate, if everything is working in our favor, we should not be risking as much, meaning we should be getting T1s fairly quickly, right? That's the expectation that we have from these setups, okay? I'm just gonna make this 50% transparent and kind of make this the default. So style fill, yep, there we go. That's all done, okay? So, and that's that. We're kind of hands off on this. As we saw, it kind of moved away from us. It did fill the UFO up above, which is okay, right? The orders are filled. Now we should see some sort of movement, and we see the orders filling down below here. So it's a bit of a contest between the two sides, obviously, the buyers and the sellers. We need to see this kind of push down below or push up. Again, it's either one. We're okay with either one. That's the reasoning and the thinking you should have when you enter these trades. In the meantime, since there's not much else to do there, we're going to go ahead and take a look and see if there's anything else going on. We did look at RTY, ES. Okay, ES is also kind of pulling back onto the moving average, obviously, as it expands. YM is also kind of there. Let's take a look at YM first. The reason why I want to take a look at YM first is the following. 0.6 ATRs, third candle down out of typically 7, right? RTY was the same thing, third out of 8 technically, but it's already kind of went past there. So let's take a look at the Dow. See, this is the kind of day I like, a lot more active day where you don't have to keep coming up with topics to think about. You just kind of, you go through the trades, you go through the instruments, find opportunities, take them, and then obviously what happens, happens. All right, so let's take a look and see what's going on here. Crude oil still kind of dancing around. Obviously, it'd be really nice if this UFO got filled and price pushed down to our T1. That would honestly be the best case scenario. Obviously, it's made a top up here right above our stop, so we're looking okay there. If it moves on forward upwards, that's fine too. Here we go. We got the Dow loaded. I don't know, something's wrong with my keyboard. It's just not working properly with TradeStation or something. I'm selecting this, but it's using this. Anyways. And maybe because of the amount of movement, I think my TradeStation might have locked up a little. I mean, I'm seeing all this stuff that I can select, even though it's not letting me do it. Yeah, that's interesting. My TradeStation has locked up a little. There we go. We're back in action. Okay, so I'm just gonna reset the range here. Delete this. That's there. Okay, this should be showing up, but it's not. Just redo that real quick. Okay, so here we go. We see the Dow Jones kind of climbing back on up. Let's see if we can have a potential opportunity here. A moving average being at 36.73. That's, I would say, right about here. If price were to move up about 50 ticks, do we see it touching the bottom of this UFO at 36.81? I would say definitely. I definitely see it being into this UFO here. So that will give us an opportunity to short this here. So 36.80, 680 is actually 36.80 even. 36.80 even is our setup. Obviously this one, if you're not going to be 723, I would definitely say this one because it's also quite a bit of risk here. I mean, we're looking at 723 minus 680, 43 times 5, it's 215 bucks. I would say this one is also something that maybe you should take on a micro. Again, it just really depends on you and the way you trade with this. I'm just going to frame this out on this one. I would definitely take it on the micro as well. Myself, I would definitely take that on the micro. 723. Joe, these charts have 89 bars back to prevent exactly that. So these charts have 59. The one down below has 500 back. Why is it not read it? There we go. Yeah, so this one has 500 bars back. And then if you don't use the reactive time frames, the smaller ones, you can just take these out of your workspace to kind of save on computing power as well. All right, so we said 723 minus 680, that's 43 ticks. Minus 680, that's 637 will be our T1. And it looks like our crude oil trade did get stopped out, oh my god, to the tick. Okay, so that's, you know, we have to log that in our book. It is what it is. It was a valid trade, it was a valid entry. It got filled, it went the other way. If we did get filled on the initial touch, we actually would have been out of profit, so this would be a break even. Unfortunately, that didn't happen. We got filled on the second touch, and the second touch ended up stopping us out. RTY is still kind of set up over there. We're not doing a whole bunch there, so let's go ahead and properly set this up. So we're looking at, I'm just going to enable chart trading here as well. And interestingly enough, we don't have a UFO down below. I could load some more data below just to see where it is. Actually, wait a minute. Yeah, this is not going to 634. Okay, yeah. It's climbing on up. At first I was like, whoa, it's touching the moving average, but it's not. We're nowhere near it. Yeah, you know, 73.29. I definitely see this pushing up to the 80, hopefully getting us on board and we go down with it. So looking at this, adjusting this to 36.37. Replace that order. Yes. Okay, I'm just gonna move this somewhere below this area. What we can do is we can definitely load some more data down here to see where the opposing UFOs are and put them there. But as of right now, because we don't have a whole bunch of time, but also we don't want to kind of lock this up, we're going to go ahead and cancel this and we're going to trail stop it as opposed to having a final T2. Okay, so that's that. So we set that one up as well. This one we said it was about 250 bucks. I think it was per contract, so about $430 if you were to take it with a regular contract. Obviously, like I said, I myself would definitely take this with the micro, just because you don't want to overexpose yourself to a trade like that, especially on a pretty volatile day as today. Okay, so crude oil, it's already trading above the moving average. We have the permission to technically close this workspace right now because it's already basically violating where we were going. You see the number here, the ATR is negative. That means it's trading above its moving average. Okay, now since we're kind of keep going higher, I do want to take a look at this crude oil on the 60 minute. So I'm going to go ahead and open that one up. Okay, 60 minute crude oil. How's it going so far, guys? I see Joe, you know, he's very active, and I really like that and appreciate that. I see a few of you are probably just either a little shy or just simply observing. You know, either way, just let me know how it's going. Just type, you know, okay, or not so good, or, you know, explain something else a little bit better. I'll be more than glad to do that. All right. So let's take a look at crude oil on the 60-minute time frame. It's loading up some data here. And look at that, it's at 32. We have two UFOs that are right there. So realistically speaking, the more aggressive approach right here would be to go in short right now, essentially at 25 on this second touch, right? So it's going, that is an acceptable approach right there. One thing to note here though is the following. It is currently on its 5th candle down out of typically 5. So we're at the end of the sensible climate on this 60-minute time frame for crude oil. Now, given the fact that obviously this moves a little slower, the entry that we actually that we could potentially take right here at 25 has already been touched and used up, and it looks like it's giving us another opportunity to go in with a stop up here at 35, right? So given the fact that this is such a large time frame and it's such a small risk, I'm willing to take this trade over here at 25. I'm only risking, you know, $200 on a 60-minute time frame setup. Okay, with my final target being down here at 51.93. Okay, so 51.93, and there we go. We're already in it. So it's you know, quite okay to take multiple trades on the same instrument as long as your plan allows you to do so. Okay, now we have to do the same thing that we did with the previous trade, right? We got to box it in to make sure we're getting in and out at the place that is according to our plan, according to our time stop. All right, so that's our entry candle. So we go one, right? This is 1, 2, 3, right? So at this point in time, we should either be stopped out or we should have T1. And it's that simple, that emotionless, that straightforward. We're gonna box it in again, okay? And this time our settings did save, right? So within this purple square, we need to have some sort of a result, some sort of a sense in direction. As soon as this closes, right? As soon as this third candle closes, and let's say we're still kind of dilly-dallying here. As soon as this next candle here prints, wherever it is, we automatically hit the close button on the trade. We take a small loss or a small win, whatever the case may be. Okay, that's the plan, that's the execution. No questions asked, no imprecision, no unanswered questions, right? And on top of that, I mean, this will most likely, you know, hopefully will play out before that. But something else that you could, you know, kind of anticipate and keep in mind, that this is a 60-minute climate, right? So as soon as we hit the top of the hour here at 9 a.m. my time, right, which is 12 noon Eastern time, this climate will change to a hopeful climate. So if you follow the strictest of rules, you will actually close that trade as soon as it goes past the point, right? So as soon as this candle prints, you will actually close the trade because you're allowed to, you have permission to close the trade. So let's say it's, you know, somewhere around this 120, maybe $100, maybe negative 100, maybe negative 120 bucks. You could technically close the trade and you'll be fine. You'll be okay. You would have followed the plan to the T because you're basically modifying your entry because you're allowed to do so because the climate has changed to a hopeful climate. All right, guys, that's that for today. We're finishing it up. You know, monitor this trade. Obviously, we do have a couple trades open. Here we go. Oh wow, we already got filled on YM as well. As you see, that's what it is. It pushes up quite a bit, and the climate is unconfirmed. So if I caught this 2 minutes ago, this would have been a canceled trade. But again, I didn't. I was kind of explaining that other trade. The climate did go unconfirmed, so this would have invalidated the trade. RTY is kind of the same thing. It looks like it's okay, but 56, yeah, this one is still acceptable. This is still within the plan. Okay, that's that for today, guys. I hope you had a good time with me here on this Monday morning. For me, hope to see you in about 2 weeks, if I'm not mistaken. Thank you very much, everybody. Have a wonderful day. And again, please feel free to leave any questions or comments on the website here, tradewithufos.com/Bojan. Thank you very much, everybody.